What is up, everybody? Welcome your faces back to another Satoshi Club video, where today I'm going to explain what seasonality is for you all, what it means in business and economics, and how you can use it to impact your trading performance. So without further ado, let's just get straight into it, where today I'm going to show you everything you need to know about seasonality, a few different charts that you should probably know how to take a look at, and obviously at the end of the video, a little price prediction and movement, and let's just see what's going to happen in 2023 and try to lay some expectations for ourselves right here at the Satoshi Club. So if you enjoyed the video, drop a like and subscribe to the channel. Let's just move straight into seasonality. It is a characteristic of a time series in which the data experiences regular and predictable changes that recur every calendar year. So basically it means that, something that happened in 2020, in 2021, it's probably going to happen in 2022 as well, right? But the more years it happens, the more likely it is that it's going to happen again, right? So I'm going to get into a little bit more detail, but in general, it's a little bit different with cyclical effects, because cyclical effects such as boosted sales due to low unemployment rates can span time periods shorter or longer than one calendar year. So that is something that you should keep in mind. But seasonality itself refers to predictable changes because, they happened before. It can help to analyze stocks and economic trends, and also companies can use seasonality to help determine certain business decisions such as inventories and staffing. One example of this seasonal measure is retail sales, which typically is the highest in Q4 of each year. Now, there is a lot more to understand about seasonality when it comes to the economic and business impact of it, but what I'm going to talk about in today's video is mostly the trading cycle of it and what seasonal patterns we can see on, first of all, the S&P 500, and second of all, Bitcoin, right? Our favorite. So I'll be back in a jiffy. Now, before I move into more depth about these patterns and everything, you should know that the platform that I'm looking at it on is Seasonax, right? And I didn't pay for the subscription just yet, but they do have some pretty cool stuff that I probably will pay for, before the next video, so we can include it in some other future analysis. But why do we take advantage of seasonality, and why should we? Well, in 2019, a scientific study in Rotterdam encompassed 200 plus years and 68 markets in their data, and it showed that seasonality based investment strategy indeed works. In fact, it actually outperforms far more popular strategies. So what more can an investor ask for? To benefit easily from seasonality, Seasonax shows you the exact date when to buy and sell, and this is stuff that I'm not very interested in because I'm just interested in actually spotting the patterns themselves, and then we can determine on our own when to buy and sell, because that's the optimal way to use any info in the market. Now, Microsoft, for example, as an example, right, you can see, rises typically during the highlighted time period from October 10th until the November 5th. And this seasonal pattern recurred almost every single year. And in this period, Microsoft rose on average by 8.28% and gained 90% of winning trades over the past 20 years. And this amounts to an impressive annualized gain of 203% in these 18 trading days. So you can get some pretty crazy results literally just going long in this area where Microsoft is bullish seasonally, right? So next to Microsoft, you are able to check out a lot of different instruments, a lot of different other stuff. But what I wanted to take a look at personally was the S&P 500. So what we're looking at right now is the S&P 500, right, on Seasonax. And what we can see is 72 years of information. So this was back in, a long time ago. But what this basically shows is not, since the beginning of these 72 years up until now. No, it just shows the average returns that we get on the S&P throughout this time period. So what we can see for January, for example, in the past 72 years, we can see the price is relatively bullish, right? So it starts out right here and it ends right here. And what does that mean? It means that in general, January is a bullish month with a close to 1% return, right? In the past 72 years, January was mostly a bullish chart. So what we can tell from the US 500 itself right here, if we move on to the monthly time frame, for example, we can see that, since we are having quite a retracement down here towards the downside in December, it could be likely that if we do see this candle close very bearish in the next 12 days or so, January could actually be bullish because we do need a retracement, before we continue moving towards a more downside, right? So the chart makes sense. And what this chart is going to tell us is if we see that January is seasonally a good month for the S&P 500, we should look to buy the S&P 500 in the month of January or leading up to January. So that is not something that you should follow blindly every single time. It's just an extra piece of information that you could use to make your trades a little bit more sophisticated. Now, February is typically close to zero month, right? Not much change in February. March bullish, April is a lot more bullish. May around zero, June around zero. July is also pretty bullish. August is September, quite bearish. September is actually the most bearish month when it comes to the S&P 500. And we have October, November, and December, which are very bullish because, as we can see, a lot of stuff is spiking in Q4. First of all, companies need to spend their remaining budgets, because they can. Second of all, a lot of people are buying gifts, Christmas presents, withdrawing money, planning trips, spending on airplane tickets, and more. And third of all, just people are, the year is ending, right? We want to end the year on a good note. We got to spend as much money as possible. So corporations, individuals, everybody tends to spend more in Q4, which makes perfect sense because it is backed by the seasonality chart as well. But if you want to look at, some less data, so if you want to look at data from the last 10 years, for example, you can see some different stuff, right? You can see, for example, that the month of March, you can see a big dip right here in seasonality, but March is actually a close to zero digit. July is the most bullish in the past 10 years, and September is once again the most bearish month. So after September, we tend to see a lot of increase in prices in October, November, and December, looking at the S&P 500 seasonally. Now, you can even move into the 5 years, right, to see that, the less amount of time you're actually getting on the S&P 500, the more flat the chart is going to look and the more red and green balance we're going to be seeing, because over time, over the past 70 years, the S&P is generally bullish, right? Because stocks only go up. But if you go on the 5-year mark, we did have an economic crisis in 2008. We did have a lot of this stuff going on. So we are going to see some more volatile movements in the nearer term. So what we can see here is February and March pretty red, September pretty red as always, and even December quite red, because that's just what the seasonality shows, was the averages in the past 5 years. And also a pretty cool fact is, you can also see the average return by weekday. So Mondays were bearish, Thursdays were bearish, Tuesdays, Wednesdays, and Fridays were quite bullish. So next to the US 500, we do have Bitcoin, right? And for Bitcoin, we can see that first of all, September is also a very bearish month. So if there's one thing that we learned from this video, is that you should definitely short the market leading up to September, right? I mean, everything is just pointing towards that direction. And even if you look at Bitcoin right now on the chart, let me just get into that real quick. So we have my crypto, we have my Bitcoin. If we move into the Bitcoin chart onto the daily time frame, let's say, and hop back into September of this year, we can see that September, let's see where the start of September is. So September is around here, and it ends around here. So, the average actually says that September, starting off at this point and ending off at this point, is actually still bearish, right? We can see a very small, but still, nevertheless, a decrease in price. So we can see that seasonality actually works, and this is stuff that you should use just to help you with your glimpse into the market, just to give you a little bit more extra information. If you don't have that information telling you to long, short, if you're not confident in where the market's going to go, this can just give you a little bit of a boost. So for example, for Bitcoin right here, I would move into the, let's say 5-year chart on Bitcoin. As you can see, it's absolutely completely random right here, right? And this is not a good chart to be looking at. This is just, you can't really tell anything from this chart because it's just simply not enough data, because 5 years is not even half of the lifetime of Bitcoin. But if you move into the full 12 years where Bitcoin was here, we can see a little bit more extra info, but it's still not enough. So I wouldn't personally use seasonality for Bitcoin trading at all. But for the US 500, which has been there for the past 72 years, it's definitely something to keep in mind. And not a lot of traders out there know this, right? If you're watching this video right now, you're literally in the 0.1% of traders around the entire world. People don't use this type of info, just like they don't use a lot of other stuff that I will be showing you later on. So if you enjoyed it, make sure to subscribe. Now, let's just look at the chart one last time. What did I say last time when we had a video? about the US 500, right? Well, wait, where's my US 500? No, these are by the way, these are indexes of currencies out there, right? So currencies compared to all other currencies out there, and they come in the form of formulas on your chart, which is also pretty cool. But wait, let's just get into, wow, my green list. Okay, US 500. So what can we see right here? I did say in one of the past videos that we would see some retracement from this area over here. A head and shoulders pattern, which is abundantly clear, and a wick up, spike up, and then a movement downwards. So right now, the first target for me would be right here, but the second target obviously would be down by the 3.2k level, where I expect the S&P 500 to keep going into in the mid to longer term. But since we do see that January is and tends to be bullish, right, on the seasonality chart, I'm going to expect price to, reach these areas by the end of December, and then make a retracement of some sort in the first few weeks of January, and then, in February or March, continue moving down even further. And this all depends on rate hikes, so I'm going to keep you posted on that as well. So that's it for today's video. I hope you all enjoyed it. Make sure to drop a like, subscribe to the channel, comment down below with your favorite thoughts and opinions. And lastly, I'm not a financial advisor, and you should do your own due diligence before investing into anything in the blockchain, crypto, or NFT world. So thanks for watching, and I'll see you all in the next one.